Hi, Lee Phillips here. I'm an attorney, and I've done a lot of these now, but I want to talk to you for 2 seconds about depreciation on real estate. When you depreciate the real estate, it basically gives you a depreciation that you can offset against income. The problem is that when you depreciate real estate, it only generates passive losses or passive or the losses that you get because of the depreciation, the tax, can only be used to offset passive income. That's income from rents or your K-1s in businesses that you don't materially participate in, those sorts of incomes. That's passive income. When you depreciate real estate, either commercial real estate or residential real estate, and we have other YouTube videos on that, then you get a passive loss or passive deduction that you can only use to offset passive income. Well, gee, I don't have a lot of passive income. I've got my rents, but I'm making most of my money in my W-2. How do I offset that W-2, that ordinary, that non-passive income? Can I use the depreciation to offset my non-passive income, my W-2 ordinary income? And the answer is basically no, except 2 things. One, I can qualify to be a real estate professional. Now, if you've got a big W-2 job, you're not going to qualify to be a real estate professional. There are a lot of rules as to how you become a real estate professional, but bottom line is you've got to spend at least half your time and at least 750 hours being a real estate professional. And that basically means you're working on your real estate, you're doing stuff directly related to your real estate. So you might be able to qualify as a real estate professional if you've got a lot of real estate and that's what you do for a living. Then you can be a real estate professional. And what that does is it converts your depreciation and stuff from passive to active or non-passive income. The rents become non-passive income and all of the depreciation becomes non-passive, and it can actually be used to offset your W-2 type income. Now, you could be the real estate professional, or your spouse could be the real estate professional, and you're filing a joint return. So if you're the doctor making the big bucks and your spouse is putting all the money into the real estate and he or she is doing the real estate stuff, maybe they could become a real estate professional. And then on your joint return, all of that income is ordinary income from the rents, and all the depreciation would be, I'm going to say, ordinary or non-passive depreciation that you can use to offset non-passive income. So become a real estate professional. The second way that practically you can use real estate and generate a non-passive deduction is if the real estate is a short-term rental. Now you have to follow all the short-term rental rules. The average rental period has to be under 7 days and blah, blah, blah. But at that point, the IRS isn't looking at this short-term rental as a rental. They're looking at it as a business. And you can depreciate property in your business. You can depreciate the real estate that's the business. And so the depreciation is non-passive, can be used to offset your non-passive or ordinary income. Now you got to understand that all the rents are ordinary income too, and so you could be subject to Social Security, FICA, FUDA, and all that crap. But you are getting this rental income as professional or as a business income. So 2 ways that you can get non-passive depreciation is 1, become a real estate professional, or 2, make the real estate a short-term rental. Other than that, it's going to be passive. You can only offset passive income with it, and you can accelerate it with cost segregation studies. And we have another video on the cost segregation studies that basically allows you to accelerate your depreciation, whether it's kicking off passive or non-passive. So that's a possibility too. This is Lee Phillips. Now don't forget to subscribe on me and give me the like or the thumbs up or whatever it is, and ring the bell and toot your horn and however they do on YouTube. But we'll support you if you support us. Thank you.